analysts believe buying interest in the second half of the year will reverse the negative trend in the Nigerian equities market, supported by recent price declines and anticipation of dividend declarations. Meanwhile, talks are expected to resume tomorrow in Qatar between the United States and Iran. Sam Chidoka, Group Managing Director at Anchoria, joins us now to discuss the market outlook. Sam, it's a pleasure, as always, to have you on the program today. Let's begin with your perspective on the recent bearish run, because some are saying that maybe the market is just gaining momentum for another up cycle. Would you share that sentiment, or do you think that there are more challenges ahead of us in the short term?
So I wouldn't call them challenges, right? We've seen a market that has returned before the decline. We had about 52% return. We've seen market cap go to 148 trillion naira. We touched 230 basis points in all share index, right? And so it was clear that the market was on an upswing. At some point in time, people will take profits. It's regular with markets. There'll be profit taking, and that has happened. Also, within our market, we realize that some news does affect the market. There is the hugely anticipated Dangote refinery IPO. And you find people selling down positions to prepare for that. Right. That has happened as well. And if you look at as well, when the market started taking a little dip, at the same time, yields in the fixed income market started inching up. So for those who want to balance their portfolio, you see people moving from this market to this market, still with the same capital markets, right? So it was expected. I wouldn't call it challenges. I would just say it's the highs and lows of a typical market as expected.
But do you think that the market is going to begin another upswing after the next maybe couple of weeks, because we do know that the earnings season is upon us in a few weeks? Do you think that could be the catalyst to get the market going again? Or do you think that, like you pointed out, the expectation of the Dangote refinery offer and of course the high yields in the fixed income markets may continue to put some downward pressure on equities?
So I think there's going to be some equilibrium somewhere there. We're in earnings season. People are going to begin to announce their half-year results. We expect that to give an upswing, especially with the banking stock, consumer goods, the industrial stocks. As they begin to announce their numbers for H1, I think that what's going to happen is that interest will return to the equities market, right? But that also is going to be checkmated by what's happening in the fixed income market and by the anticipated IPO, right? So I think there's going to be some equilibrium there. My only response is, it's not a time to panic. This is not a time to press the panic button, because what is happening is just market realities. People will have to balance their portfolio and take investment decisions as they see fit, right? Some profit taking has happened. There are some stocks that, based on intrinsic value, people expect that it will hit a certain price. Once it hits that price, you will see bulge investors come back to that stock and start to invest. As I would always advise people, make sure that when you take investment decisions, talk to professionals.
Indeed. And let's talk a bit about the sectors that could attract a lot of interest. Clearly, the banking sector is always one that people will check out. Given the recapitalization and how well that has worked out, what's your view on the banking sector in general? Do you think they are all set for another major round of astronomical, if you can use the word, profits, as we've seen in the past?
Well, so a caveat is to one that, yes, the banks have just raised capital, but you need time to deploy the capital and for the capital to work and then trickle down to your bottom line. All right. The capital raise is very recent. Some of them, it took some time for CBN to verify the capital before the banks actually receive the funds and they are able to deploy. So you may not see a massive influence of that capital in H1 results. But I think that in H2, we're going to begin to see the banks deploy that capital efficiently and begin to make better returns. But again, you look at oil and gas. Oil and gas has been bullish. At some point this year, we saw 100% return from the oil and gas subsector. We've seen consumer goods also do well, and we've seen industrial goods as well do well. I think the banking industry will continue to be bullish in terms of pulling the market up. And I think that banking stocks are going to continue to do well because it is just the function of how our economy is wired. The fact that even with all that the banks have done, we still have so many unbanked people. All that the banks have done, you still have so much room to create risk assets, so much room to trade. And so I think that the banking industry, it's going to continue to drive the market in the right direction.
Speaking of how the economy is wired, let's talk a bit about the macro story and how that is likely to evolve going into an election year, as many would tend to always point out, because it is a risk factor, no doubt. But what do you think about the macro story right now? So clearly, very, very stable exchange rate, but now we're seeing inflation begin to inch up, interest rates are rising again. What are your thoughts about the macro story?
So the inflationary pressure was not unexpected. Nigeria is not isolated from the world. Geopolitics is something that has affected nations and economies, right? And so the pressure that we are seeing in terms of inflation, some of it imported, some of it expected from just the things that have happened. Don't forget that we've had inflation driven by food inflation, by power inflation, and all of those things that has happened in the economy. And so I would say that we're cautiously optimistic. I think that for any knowledgeable asset manager or portfolio manager, the elections that are coming have been priced in already. We know the circle. We know that every 4 years you have elections. Personally, I think 4 years is too soon to have elections because the destructive tendencies in our economy is quite enormous. Maybe we should go to 6 years or 8 years. I really don't know. But I think that anybody who is actively managing their portfolio should have priced in the next elections into what we're saying. Yeah. So what we're going to see is gradual moderation in investment decisions. So on a macro level, I think that with the stability we've seen is going to continue. If the inflationary pressure continues, which we think will, I think we'll see the MPC step in and begin to review rates. For now, our view is that rates will hold at 26.5. And if anything, it will inch up, but not go down, because clearly the inflationary pressure is beginning to spike.
And if we consider the dynamics of the market in terms of the interplay of foreign investors and local investors, clearly a lot has changed over the last couple of years. The locals are really winning it now. But at some point, given the macro stability, what are your thoughts about the extent to which the foreign investors may begin to become a major player in this market?
Well, I think that those days are mostly over. I think, so what has happened is that there is now a lot of capital in country, right? Especially with the pension funds. That Pension Reform Act of 2004 has really changed, is a game changer. And we see a lot of liquidity, especially with the pension funds. And we think that liquidity has come to stay. And if you look at the Nigerian equities market, today, local investors are leading the charge, unlike what we used to have when there was a time in this market where 60 to 70% investment was hot money, that at the slightest take, the money is out of the country. But today, we have that stability. And I think that stability has come to stay. But it's important that in terms of our monetary policies and our fiscal policies, we continue to harness the local capital formation that is happening and continue to encourage it. The tax reforms, good, but maybe not as smooth as one would have expected it. So there's still some work to be done in terms of understanding and application. But I think that the local market is healthy, is stable. I think the CBN has done a yeoman's job with managing exchange rate. Now you can plan. Yes, you can complain it's high, but you can plan. And for a business person, just the ability to plan and expect that in 6 months, in 1 year, this will be what it is, helps you in a strategic thinking position.
And no doubt. Let's talk very briefly on that IPO market and what to expect with the Dangote offer. Many are suggesting that this is going to really be a global offer, given its potential size and, of course, the level of interest, considering how significant the refinery is in terms of operation, not even just in Nigeria, but even across West Africa. Yeah. What are your thoughts about what that signals for the market?
So I will add across West Africa and across the world. The Dangote refinery is definitely a game changer in that sector. I think that IPO is going to be significant and remarkable, and it's going to be a definite game changer as far as the way we look at the IPO market, right? And I think that it will give some other companies the confidence to come back. However, make sure that when you try to tap the market, you're also positioned in a place where investors intrinsically see value in the company. Don't jump to do an IPO because Dangote has done it. It doesn't work that way. I think that we haven't had so many IPOs, but I think that this is the beginning of confidence returning to that market. Definitely it will be an international tool.
Do you think there's a lack of confidence in the IPO market, or do you just think it's more of economic factors? Because typically you have IPOs when companies are expanding. Do you think that possibly has been the reason why we haven't seen as much?
So I think it's a combination of both. I think it's a combination of confidence and it's a combination of economic realities, right? With raising capital, timing is key. Timing is key. And then for mature companies, for companies who are coming for further raises, right, it's easier to handle. But for a company coming for an IPO, you've got to get the timing right. You've got to make sure that the company is ready. You've got to get your story right. You've got to get your strategy right. You've got to get your market right. The banking consolidation was regulatory driven. That's not a right place to point to go to the market. But Dangote IPO is not regulatory driven. It's driven by the need to democratize a huge investment in Nigeria. So perhaps other people will begin to look around and see some of the fintech companies that have done so well might, after the Dangote IPO, think that, okay, maybe we are ripe to come to the market. Right. So I think that we are optimistic in the IPO market going forward.
Well, fingers crossed. We'll see how it plays out. Thank you so much for coming in today, Sam Chidoka, Group Managing Director at Anchoria.